So, good evening once more. We are on the week ended 22nd March. Today is Saturday, 23rd of March. As always, our evening masterclass session. Nifty, how did it fare? Now, you know that I use Heikinashi charts, but for, the one issue I face with Heikinashi is we don't get to see the range properly and the open. So that you get it a better understanding, what we have is a pullback week on the weekly time frame after last week's sell-off. The momentum reading is still fairly down. It is picking up more momentum on the downside, and it looks like the market has been slowing down the buying intensity that we have noticed. However, the selling did lead to a sharp bounce back, and Friday's trade, if you notice, has created a pretty big outside bar, breaking below the lows, opening low, breaking below the lows, taking out the weak hands, bouncing up and taking out the highs, slipping sharply from the intraday highs. Drama. I have one word for this, the choppiness and volume volatility, and that word is perfect. It's drama. So where are we? The daily time frame is not in a downtrend. It's picked up pretty nice in the last 3 days. Momentum is just improving. My short-term momentum indicators, oscillators, have gone overbought. In a down momentum situation on the weekly time frame, it calls for follow-through weakness, prospective weakness. Maybe not one way, but yeah, we might probably be stuck within Friday's range in the early next week. Now, Monday is a trading holiday, so we'll see with what overnight international cues that we open the market with. But Friday's range, which is a fairly wide one, almost touching one standard deviation, will be the range to look for from a short-term point of view, which is around 22,200 on the upside and around little below 21,900 on the downside. This is what we are talking about. Strategically, for a short-term momentum trader, stay open to shorts as well as longs. Positional long-only traders should slow down a little bit. Just wait out and see. Before I move on to the other sectors, I can tell you one thing, that in these kind of formations, when I see these kind of formations, the last week's low for the Nifty is the crucial. Means for some reason, for whatever reason, if we see that last week's low gets broken next week, though next week we have only 3 trading sessions, Friday being a market holiday, by whatever reason, if we see that the market breaks the low before the high, then don't be in a hurry to add long positions at all. That would lead to some serious weakness. As long as last week's low holds, the possibility of both sides choppiness, short-term buys and longs and shorts will continue. It's not going to be easy. Now, before I go to the small caps and all, I should quickly take a look at the sectoral gainers last week. So this is the RRG graphs on stockcharts.com, which I use, and I have opened the weekly time frame. I'm going to just sort it out, and you would see that real estate, the sector which had fallen quite sharply, has given a bounce back. Auto was a strong sector, has bounced back pretty well. So essentially most of the gains coming in from these three: real estate, auto and metals. It's mixed across the tails. This is why we have so much volatility. However, at the bottom end, we have the bank nifty, the financials, the FMCG, and look down over here, IT, 6.2% down. So that's the weakness coming in. If I increase the tail length to, let's say, 12 weeks, close to a quarter, you would notice something. If I sort in terms of the tail, then take a look at oil and gas. It's just slowing down its relative strength momentum. Auto is relatively much better off. Healthcare is fine, though we had kind of called in the breakdown pretty well on the healthcare pack, and it's now IT. This is the one which is the pocket of weakness. Now it's in the leading quadrant. We'll take a look. What I'm trying to explain is, if you come and take a look at the CNX IT with me, what you will notice is a complete breakdown on the daily time frame and a big fall on the weekly time frame. But the weekly structure is fairly okay. It's just weakening. So I feel that, considering IT has relative strength based on the RRG graphs, somewhere close to its previous fractal highs, it should be able to find some bit of a support. But IT definitely is the weak link in last week. Consumer durables, nothing much. Realty, look how it falls, how the momentum of the relative strength slips. Then it goes to the weakening quadrant. So relative strength, momentum has gone off. Now if it goes this way, that is clockwise, then the relative strength will go away. It's not complex. It needs a certain degree of understanding. The bottom line is, real estate, if you take a look at the CNX real estate with me, you would see this. This is what it means. Means the way it was outperforming the CNX 500 earlier, it is not anymore. That is why the drop. Now, if the CNX 500 falls and CNX realty falls, but the CNX realty falls much more than 500, if that happens, then this guy will start to go leftwards. This is what it means. So bottom line, CNX reality will be range bound. Small cap is weakening, mid cap's relative strength is also weakening. But my interest is down here, that is Bank Nifty and financials. It has been in the lagging quadrant and it's somewhere in the middle of the lagging quadrant. Middle of the horizontal axis, which means there is room on the left hand side. It can continue to show range bound activity vis-a-vis the market and lose momentum, or else it can actually pick up from here. If it picks up from here, that is, it's picking up momentum of the relative strength and behave like this, this will be a very good news for the Nifty, because that will mean that the Bank Nifty is trying to show some relative strength. Now let's take a look at Bank Nifty. What do we see? On the weekly time frame, we see an uptrending market coming off and holding. Momentum reading is not that bad. This is not a bearish reading of the Bank Nifty weekly chart. It's actually, if you ask me, fairly bullish. If you draw some lines and all, you would find yourself within a pretty wide symmetrical triangular formation. Now, it is not a symmetrical triangle, if you ask me, because the previous trend is this much and you don't need a more number of days to consolidate a previous trend. It means, in layman's language, if my journey is of 2 hours and I need a break in between, I don't wait for 3 hours. I don't take a halt for 3 hours when my entire journey is of 2 hours, right? So it looks like a symmetrical triangle, but I don't think so. It's a symmetrical triangle. Nevertheless, it's in a congestion. It's creating a range. The daily chart has just started to improve the trend and the momentum. It's too early to say. But keep an eye on Bank Nifty. Keep an eye on iBank. Keep an eye on SBI. Definitely Axis Bank. We might get movements in either direction, especially from the Bank Nifty and the financials. Metals, tough. It is not easy. Look at the lows that the index CNX metal has created down here. If you connect from these kind of, though that's not a very good low, if you ask me, these are much better. So this is the breakout failure on the weekly chart. Huge sell-off, bounce back. I'll just spend 1 minute over here. This was the first breakout. This was the second breakout. The first breakout failed immediately, bounced back, led to another breakout which failed, and again a bounce back. The difference between, if you take a look at the first breakout and the second breakout, the momentum has been cooling off continuously. When I see these kind of formations, which is typically, you see, okay, you will understand, you will get a better example here. What I want to show you is, when a chart gives you a breakout, and this is not a very big of a failure, but it fails to go further up and it gives a pullback. Breakout doesn't sustain, pullback. These are the three things. And if the pullback bar's low is broken, then expect a downside for sure. Highly likely. So this week's low, if it gets broken, and the same goes with Nifty, then those who are more inclined towards bearishness and expect the market to go down and make some returns on the downside, last week's low period is very important. If it breaks, I think left, right, center, everything, most of the market will fall. Till then, a little bit of buying from that sector, a little bit of selling from the other sector, and it's not going to go anywhere and stay range bound, choppy. Metals on the daily time frame has improved its trend and momentum after the pullback. It's going up, so all you know, it can completely stay in that range bound formation. See this? This is what I mean. This is CNX PSU Bank. Downtrend, downward momentum, picking up a bit of a short-term momentum and trend. Short-term oscillators going over bought. Look for some signs of weakness. If you're an intraday trader, if you trade the hourly kind of a time frame, look for weakness in the CNX PSU if Friday's low is broken. If Friday's low is broken, Tuesday or Wednesday, if this movement does not extend, if it starts to show weakness like this, you definitely will have opportunities on the downside. PSU banking back. Same goes with energy. Same. Very similar reading. So what I'm getting hint from these sectoral indices is clearly make or break below or break below last week's low. Make it has a long way to go. Most of the sectors will have a long way to its previous high. So make will not be easy. It will probably stay range bound to choppy or something like an auto, which is bouncing back to its previous high pretty well and creating big ranged bars on the weekly time frame. Difficult to trade. Pharma, we picked up this bottom this breakdown pretty well, and now it's giving us a bounce back again. Look at the pullback bar. Same story applies here. So I'm getting this sense, this reading from the overall market and most of the sectors, which is if for some reason market has to break down and we get a move below this week's low, the week that we just passed, then it will lead to serious weakness. On the other hand, if it does not, and we see that Nifty or the most of the sectoral indices on the weekly time frame do not break the lows. In fact, do not even go below 50% mark. Let's say it stays somewhere like that and shows strength. It's completely fine. We'll get long opportunities. Choppiness will be there. Intraday volatility will be there. We are fine. Bulls, those who trade on the long side should be fine. It will not be easy, but should be fine. What should not be fine if the low is broken. So be careful on that and strategize accordingly. I'll just quickly take a look at the FMCG because that's the pocket which had given us a breakdown. You see this breakdown, but it's a immediate bounce back, which means that anyone who would have gone short here has definitely got trapped to some extent, and probably this index will go up here and create a much weird looking range, which is more like a broadening triangular formation. This is what I mean, a broadening triangular formation. I don't think it makes much sense to say that all these discussion has given us only few key pointers. The choppiness, volatility will continue. Short-term traders have to look opportunities on either direction. Be very strict with your levels and stop losses. Do not guess the market. Directional clarity, especially on the downside below last week's low, is much more clarity on the downside than on the upside. Because if I take a look at the higher time frames, the Nifty is still struggling a bit in terms of its underlying momentum. These are not good readings. So I have better clarity on the downside only below last week's low, but above last week's high, the upside clarity is not as much as it is on the downside because we have a setup here. So we kind of at crossroads, so we need to deal with the market accordingly. Okay? Chaliye, let's move ahead. I have run a couple of scanners and we've got some opportunities. So we'll take a look at that. But before that, I'll first clear out all your doubts and questions.